Enthusiasm about Greece's election results wanes as Spain's borrowing costs surge over 7%, reigniting worries about the financial crisis in the Eurozone. U.S. futures are nearly unchanged ahead of the FOMC meeting's outcome tomorrow. Earnings out today from Barnes & Noble and FedEx. I'm Brittany Umar, and the Morning Call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. Now, at the open yesterday, looked as though we might have a disappointing day, but things turned around and ended up being a good day for traders. So what did you make of the action we saw yesterday?
Well, on Sunday, you finally had the Greek elections out of the way, and everyone was expecting a huge gap up or a huge gap down. So yesterday, we had a soft gap down. But what it did is it created opportunities for traders. I said yesterday in the morning call, I said, IBD, put us in a confirmed rally Friday. So if it's going to hold that thesis, we need some participation from leaders. So yesterday, high beta tech led the way, which is what you want to see. You saw old school names like Amazon, Apple, eBay, even Google bounce. You had a nice day for traders, and you actually had a good entry versus chasing a gap up that makes traders frustrated.
Now, with Spanish yields where they are right now, it seems as though owning stocks would be risky, but it's actually paying off in a lot of instances.
Yeah, well, a lot of people are reading the headlines and they're not reading the tape. And the tape has told a different story than the headlines. And yes, Spanish yields are above 7%. And yes, the G20 is meeting and things are complicated. But if you look at the chart of the S&P, you will see market is taking it in stride. If you recall this little inverted head and shoulders pattern we keep talking about, where 1306, 1309 held, that was your support to trade against. Then we started breaking above this 1330. And now look at us in motion here. We're going back to about 1360. So at this particular point, I think guys trading the tape versus the headlines are making money. Next big significant resistance comes in around 1358 on the SPX.
All right, so you mentioned high beta tech. We saw that perform well yesterday. We also saw social media stocks looking like a strong group right now. So who are the highlights here?
Well, quickly I'll turn to Apple because that was my focus yesterday. Apple broke above its 50-day moving average. Very healthy. Let's see if it could stay above it. Look at this day yesterday. Doesn't look like much, but traders can make a lot of money on a stock that goes up 12 points. Next point for it to get above is this 588, and then it could be back above 600 pretty quick. Amazon also, held the earnings gap yesterday. We talked about adding some right around here, around 219. That continued, and lastly, it's not high beta, but look at eBay. eBay, no bad market here. Two ways to make money. If you're a macro investor holding and then a breakout trader looking to get in above 4160. So there's a lot to be happy about in this market if you just get away from reading the headlines and being so obsessed on every tick that the European headlines make.
So what do you think about the standouts in social media?
I think another great trade. We talked about it here on Conversations on Thursday that we were going long above 2810. If you look here at Facebook, Facebook had an unbelievable move from that area. Yes, was it a bad IPO? Yes. Did Morgan Stanley and the NASDAQ screw it up here? You know what? Their fault there. This is your opportunity. This was that red dog reversal. Here is where it really started to get frisky above 2810, and now it went to 32. Right into resistance. At this point, I think you got to let it consolidate for a new setup, but there was action there. There was action in LinkedIn. LinkedIn just came all the way back up to resistance around 105, took back to 50 there. I'd like to see this hold 102. So there is a lot of action if you don't, again, get caught up reading the headlines all night long and being obsessed with yields.
And you're long gold right now, so what's your game plan there?
I think gold, I've tried this many times here. It's right knocking on that door, that intermediate downtrend. If you look here at gold, we're at another inflection. Big Ben gives his testimony or speaks tomorrow. Here's that intermediate downtrend. It's holding right in front of it. I am long some, not a lot, but if it starts getting above this 158.50, 159.20, you could see this set in motion for what could be a new trend here in gold.
All right, well, we are going to dive into all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.